All down. All silent. Going. Go. So congratulations.
Welcome to the Current Market Insights podcast, brought to you by Harris Partners Real Estate. Each episode, we chat with real estate author and industry leader Peter O'Malley to discuss the current property market conditions and provide insights to assist you on your property journey.
Hello and welcome to another edition of Current Market Insights. I'm your host, Ciaran O'Brien, and with me as always is my good friend and co-host, Mr. Peter O'Malley. Peter, hello.
Ciaran, great to see you.
Great to see you, Peter. I want to jump straight into today and talk about an article that came out just this week about some topics really that we have touched on quite a lot on the podcast and in the newsletters and various things we've done over the past period of time. The Consumer Affairs Group in Victoria, I liken them to say Fair Trading in New South Wales, have initiated some federal court proceedings against an agent in the southeast of Melbourne for some pretty serious allegations of underquoting on some properties. We have obviously talked about underquoting a lot, and we've talked about the idea that the regulators need some teeth and a little bit of mongrel and some action on trying to change behaviours here. Firstly, I'd love to get your thoughts on the article itself and give our listeners a little bit more sense of what actually has occurred. And then I'd really like to get some sense from you about whether or not you think this is a significant enough event to actually, have some downstream effects on agent behaviour across the marketplace.
Thanks, Ciaran. A tale of woe, this one is. Unsurprising, though. So the specifics of the case that you've just mentioned is Ray White Oakley and an agent there, Nick Strelakis, have been accused of underquoting on at least 11 properties by Consumer Affairs Victoria and will face the federal court over the alleged breaches of consumer law. Now, the reason we're zeroing in on an issue in Victoria, Ciaran, is you're going to see an example of this very, very soon, I suspect, in New South Wales. And if I can just reread that article, and it's in the subtlety here that's the most powerful. Consumer Affairs Victoria are taking a real estate agent to the federal court over the alleged breaches of consumer law. So I was at a conference this week and the number one lawyer for real estate agents in New South Wales spoke at it. And he said to the audience that very soon real estate agents in New South Wales are going to lose their licences for underquoting, and that the New South Wales Fair Trading has had enough of the real estate industry not listening to the attempt to clean up underquoting, and there'll be some big scalps very, very soon.
Look, I must admit that gives me a lot of joy to hear. I mean, we have spoken at length about the plague that is underquoting. Not only does it completely undermine the sales process for a seller, but it has just created this scenario where the general public thinks that all real estate agents are dogs and that we can't be honest and operate with integrity because of all this problems. I must admit I'm excited that there will be some punitive punishments going on.
So on that, yes, up until now there's been modest fines to $2,200 in New South Wales for an agent that's caught underquoting. And that is issued by the Department of Fair Trade, and real estate agents have treated that as the cost of doing business if you do happen to get caught. Both Consumer Affairs Victoria and the New South Wales Fair Trading are taking real estate agents to the federal court under the Australian consumer law, and that is going to be much more serious punishments. They are talking for this firm in Victoria. They could face fines of up to $50 million and $2.5 million respectively for the agency and the agent. So the regulator is dialing it up no end on the industry, and it would be reckless of a real estate agent to not take note of what's happening here, and would be completely naive to say for a Queensland or a New South Wales real estate agents to say that doesn't apply to us, that's down in Victoria. This is the template for where the other states will go, which is why it's so significant to the majority of people that listen to us being in the Sydney market.
Absolutely. And, you know, the whole, I guess the whole angle I was heading for there was to talk about these potential damages. Australian consumer law has, it's one of those, I think, those instruments that seems relatively weak until you need to use it as a consumer or as a business. And you notice actually it's got quite a lot of teeth. It can be quite punitive, and it is a great protection as a consumer. I think this really does set an interesting precedent, and we do know historically that cases in the federal court impact all state law, or they tend to be at least very least referred to in future cases. Personally, I'd love to see one of these agencies get stung with a $50 million fine because, as you say, in New South Wales, $2,000, $2,500, whatever it might be, as the cost of doing business, for some of these agencies with incredible turnover in terms of volume and sales, that wouldn't even be the cost of driving to the property the first time. I mean, it's not even. It's not remotely punitive when they can factor it into just doing their day-to-day activity.
A penalty needs to change behaviours, and the regulator has not been able to change agents' behaviours. In fact, it's got worse since they overhauled the underquoting rules in New South Wales in 2015, 2016, where we've spoken before that the 20% underquote, is what the previous 10% underquote was. So someone told me today we've got a house on the market and the next door neighbour is on the market. The two vendors know each other. And one vendor said to our vendor that they're expecting 20% above what the agent's guide price is. But that's just how you market property at the moment.
Yeah, which, as I've just said, is absolutely ridiculous and completely undermines any trust in the industry. Another part of this article that I'm pretty interested in, and it touches on something we have written about and spoken about together, the agents in question, the agent and the agency in question, also use some pretty manipulative tactics, I guess, is probably the best description here. We've talked about this concept of a kicker before for an agent looking to sell your property. Can you give our listeners some insight into what they've done in terms of either coercing or, using some inducement with their sellers to commit them to the same underquoting kind of pathway?
Yeah, well, look, I'll just read quote unquote from the article, Ciaran. It said, the watchdog said the real estate agency and the agent in question, Strelakis, had engaged in alleged misleading and deceptive conduct and making false and misleading statements by advertising the homes well below their market value, and in some cases taking larger commissions if property sold above the low reserves they set, influenced by underquoting. So basically what the agent is doing is conditioning their vendor down to a low reserve price, then saying, if I can get above a certain level, are you okay if I get an additional percentage on the commission for doing a good job? It said that in 7 of the 11 cases of accused underquoting, the vendors agreed to pay a flat commission between 2 and 2.5% on the sale of their home, but if the price went over the reserve, the agents would then receive as much as 25% of proceeds that exceed the vendor's lowest acceptable price. Consumer Affairs Victoria said the vendors typically set their reserves with the agent's lower price estimates. So we have warned before about the dangers of kickers, is that if you run an auction on your property and it wildly exceeds the reserve, that's your good luck for the hardship and the hard times of owning that property. You are not compelled in the slightest to give every fourth dollar 25% to the real estate agency because they're merely doing their job. And you've been manipulated, is what Consumer Affairs Victoria are alleging here, particularly when you've been manipulated into setting a low reserve to begin with, which sets up the agent to earn themselves a monster commission.
Yeah, we've only got to look at some of the results for auctions that we know are very clearly underquoted in Sydney here to know that, we could be talking the order of $150,000, $200,000 bonus in some of these cases for agents for just doing the wrong thing and getting lucky on the Saturday, which is absolutely obscene.
The other one that I think needs to be mentioned in the article, which we've spoken about the accusations so far, Ciaran, but if you want to know about the mentality of some real estate agents that operate in this industry, Consumer Affairs Victoria says the agents took bets internally on how much the allegedly underquoted properties would eventually sell for. Like, this is behaviour that would make the Wolf of Wall Street blush.
Yeah, and I must admit, I think a little bit of the reason that this case is actually gaining traction towards some litigation is that they were stupid enough to talk about this internally, and communicate.
And on text message.
On text, that's what I'm saying. You know, I'm sure, no doubt, there's agents out there who, through conversation over coffee or a beer or whatever, talk about and laugh about the scenarios they're in. But these guys were dumb enough to put it to paper, or text message in this case, which is
they're unlucky enough to get caught. They're certainly not, operating in isolation in that manner.
Oh, look, you don't get caught if you don't do the wrong thing, Peter. That's for sure. Good chat. I'd really love to change completely, actually, the topic that we're talking about and shift over to the US election. We don't often talk about it in depth for good reason, because we're not necessarily influenced by the US political happenings over here. But given that we're really heading to the crunch time now, it's almost election day. The new president of the United States, whoever it is, will be decided in the coming weeks and months. I'm interested to get your thoughts on, with what's currently happening over there, with what we're seeing in the property market over here, the situation in the Middle East, all the global events that are occurring. I'd love to get some sense from you as to what you think is the likely outcome at the moment, and do you think there's likely to be flow-on effects from that outcome, just in terms of how our economy is operating, given we are, typically beholden to the US?
So when we did Talking Property recording with Louis Christopher in the middle of the year and this came up, my view at that stage was that Joe Biden would be scratched from the race, which is what happened.
Good pick.
And that the party that would win the White House is the party that would leak the least votes to RFK.
Yep.
Freudian slip there. I nearly said JFK.
To RFK. They're not looking to him anymore, mate.
And clearly, since then, Joe Biden was scratched from the race, and RFK has teamed up with the Republicans and Trump. So it's looking like, if you look at betting markets, polls, sentiment, the flow of the campaign, the commentary on left-wing mediums such as CNN, it's pretty clear that Trump, on all the available evidence, is cruising to victory. I think if you look at the gold price, that's telling a story at the moment. Everyone has a theory as to why gold has accelerated in price so much in the last 2 weeks, and that acceleration in the gold price has actually paralleled Trump standing in the polls. And my view, Ciaran, is that the Trump presidency is going to be inflationary. He's going to spend, and pressure the Federal Reserve to cut with interest rates. Donald Trump is not a man for, modest and conservative financial management. He might claim to be in opposition, but the reality is, as we saw in his first stanza, that he'll do good things, but he'll also create more global inflation. That's my view, and I think that is why, more than any other reason, you've seen the gold price rally from 2,000, 2,200 only a few months ago to it could go through 2,800. It's sitting at 2,750 this weekend.
Yeah, I think the one of the common threads with populism and populist leaders is they spend to stay popular, and I think that's there's certainly consumer confidence that I have seen as well that's rallied around his drive. I must admit, I find it quite interesting. If you look at the US as a bit of a mirror for us, a bigger, larger mirror in some ways. There's many of the problems we face here in terms of cost of living and pressures, inflationary pressures, etc. They are facing there as well for different reasons. It looks to me like I would agree with you that there is certainly there's momentum in the Republican campaign that wasn't there to begin with, and similarly the Democrat campaign is sliding away. If you're right, and Trump takes the White House and goes on a kind of pro-America, pro-growth, pro-popularity kind of campaign in his first year or 18 months. Do you think that will have a strong enough impact on the economy and inflation and global inflation to delay the RBA's movements here in terms of how they handle domestic inflation?
Oh, I do. That's why I raised the point. Yeah,
Okay.
yeah, absolutely. If we're going to see another wave of global inflation, whilst Australia has one of the highest inflation rates across the world at the moment, which is largely driven, as we're learning, by government spending, they might finally get that under control where we get a big inflation number in the coming week here in Australia. They might, the cruelness here is they might get it just under control right at a point where policies in America set another chain of global inflation racing again. Absolutely.
Yeah, and I suppose as a nation we can't just put our heads in the sand like we'd like to and avoid the fact that global inflation really does impact us here.
It's tricky because China's in deflation. America seems to have their inflation under control, but the likely president on all the available facts is going to be very inflationary. And at the same time, as we're speaking, Israel are bombing Iran. That's not going to help the whole Middle East conflict, and the shipping containers will continue to have to go the long way around between the north and the southern hemisphere, around the bottom of Africa there rather than through the Middle East. I'm told that adds 4 days to a ship's journey by someone who's in the industry. Again, that's an inflationary measure. So, very, very tricky outlook, and the presidential election will have knock-on effects. I won't say they'll have necessarily direct effects for the Sydney and Australian property market, but there'll be knock-on effects, downwind effects for sure.
Yeah, certainly, even if you're not interested in US politics, it's probably not a bad time if you're in Sydney to keep an eye on what is happening, because we are in a period where the outcome could quite genuinely impact our lifestyle here in Australia. As we wrap up today then, Peter, I'd really like this week to change a little bit from the raw numbers, which we often refer to when we're doing our market wraps, and just get more of I'm going to call it a sense check or a vibe for our younger listeners of your experience out on the hustings at the moment, given that recent conversations we've had talk about a surge in listings and a bit of a difficult or tricky time in real estate. What's your sense of who's out and about at the moment? As always, which properties are doing the best in terms of buyer to seller kind of ratios and sentiment? And are there any tricks or any good bits of advice for any potential buyers out there to just try and lock down the right one for them?
Yeah, well, look, the things that are doing the best are the more expensive properties, and the properties that are attracting the most bidders are the ones that are most underquoted.
Of course.
So that sort of ties back in with our opening point, of course. Look, there are pockets of resistance in the market and there are pockets of weakness, and the pockets of weakness are expanding while the pockets of strength are diminishing. So it's subtle, but yeah, I've seen some really good, what you might call prestige sales across the city, but it's probably not as hot as what it was this time last year. It's really sad, and it's really common that we're seeing lots of apartment owners that are having held that property for 5 to 8 years and selling it for the same price, if not less than what they paid for it. That's a really common story at the moment, and that's a tough spot for the market to be in, and it's starting to get more and more publicity at this point, because we've got a state government that says the future is apartments, but you've got thousands of apartments around the city that are worth the same price, if not less today, than what they were 8 years ago. So where do they think the enthusiasm for more apartments is going to come from? I do not know.
Oh, well, look, I've given my opinion on this before, and I think there's a whole swathe of people in the market who absolutely love the concept that people aren't making money on property and that everything in their mind will just magically, get 80% cheaper, and they'll get into it. Interestingly, on Saturdays, I quite often help with some of the rental opens. I get out and I meet a lot of tenants and a lot of people who aren't yet property owners. And I'm finding more and more in the rental opens that the people who are moving out of these properties have bought, so it's not like the market is completely shut off. It's not like you can't rent and buy. I mean, I'm sure all of us who own a property have done that. It shows me that there is still opportunity out there for people. It's not, Sydney's not completely lost, but it's also not just going to collapse into this massive deficit where everyone just gets a free, house and away we go.
Look, let's talk about a strata apartment that's worth the same price as what it was 8 years ago, but it's got clean strata. Because what's damaged the value of a lot of apartments is the strata books and the running and the build quality. But let's talk about a good, well-run strata apartment that is for sale now for a price that it was last traded at the same price in 2016. And this is where I don't quite get the whole first home buyer victims thing, but you're seeing on the ground people moving from tenancy into a property, their first property, is that wages are up since 2016, prices are the same, and mortgage rates are slightly lower. They might be much higher than what they were in 2021, but mortgage rates are actually slightly lower than what they were in some of those timeframes that we're talking about. So the buyer's paying less for finance, earning more, and paying the same price as what someone did in 2016, but somehow they can't get into the property ladder. Well, getting into the property market is about compromise and sacrifice early, and it'll hopefully pay dividends at the other end, which it hasn't in the case of the people that have purchased in 2016, but that's what it's all about.
Well, that's it. And we have always said that, if you're investing in property purely to make a profit and you're just buying anything, then that's a pretty haphazard way to go about it. You've got to be selective, same as you would be with your investments in shares or in an exchange traded fund or a hedge fund, whatever it might be. You've got to pick something you believe in and you believe in the fundamental properties. Otherwise, you're not going to make money in the long run.
In a boom, everything goes up. Booming share market, booming property market, everything goes up. But when the correction holds in, it's a flight to quality.
Of course. Look, really great discussion today, Peter. Some interesting topics. I certainly will be keeping a close eye on what happens in the federal court with this agency in Victoria. And I must admit, I'm very, very hopeful for a strong punitive outcome here because I think it'd be good for the industry at large, but also just great for Australian consumers to know that someone does have their back in this space.
Indeed. Thanks, Ciaran.
And thanks to everyone for listening to Current Market Insights. We look forward to speaking with you next time.
Thanks for joining us on the Current Market Insights podcast, brought to you by Harris Partners Real Estate, the podcast providing real estate insights you won't find anywhere else.